Good morning, traders. It is 8 a.m. Chicago time on Thursday, the 2nd of March, 2023. This is episode number 2421. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Those of you who are confused by yesterday, as I had to do an early show that started at 7:45 Central, 8:45 Eastern. However, you could have watched that all throughout the session yesterday. These videos are on YouTube. You can always go back and look at what was said and examine it and criticize, if you like, versus what you see in the markets. Let's just jump right over into Convergent Trading's pre-market summary sheet here. We're starting off with a mix to slight risk off to mild risk off this morning. We did get some numbers, some key elements kind of kicking in today. We got some we got some releases relating to non-farm productivity, Q on Q, unit labor costs. Unit labor costs came in pretty hot. Jobless claims 4-week average came in relatively hot. Initial claims came in relatively hot, 190,000 versus 195,000. But mostly we got the inflation rate out of the Eurozone this morning came in at 8.5% versus 8.2%. The unemployment rate's a little higher at 6.7 versus 6.6. So, as it says here, higher than expected EU inflation figures. Inflation continues to overshoot expectations. Yields higher, stocks lower. That's been pretty much the tone throughout. This tone is not likely to change until next Friday's non-farm payrolls, unemployment, jobs report in the U.S. We do have Fed's Powell testifying next week. What's it called? The Higgins something. I always forget what that's called. That testimony to the Senate and to the House. The expectation there is he's not going to say anything different. That's happening on Wednesday, March 8th at 9 a.m. This is a scheduled event. He really isn't expected to say anything too special. And then we got the jobs report, which was a blowout report last month. Yesterday, Salesforce reported and had really good results. Tesla, however, has failed to disclose what its super duper new car is going to be. Humphrey Hawkins. There you go. Higgins. So Tesla's down 8%, a big drag today on the Nasdaq and the major indices. Um, that's about it. Looking forward, really, there's not much to speak of. We have BOE's Pill speaking at 9. We have Fed's Waller, Fed's Kashkari, Fed's Waller at 4, right at the cash close. Fed's Kashkari at 6, and that just about wraps it up for today. We do have the Caixin Services PMI out of China this evening. That may be a mover. A news report yesterday on the Wall Street Journal was that the U.S. is moving towards consolidating consensus on sanctions against China vis-a-vis the Russian involvement, in the Russian invasion of Ukraine. This is very likely to have a negative effect on the market. This is a huge risk overhang. And so the geopolitics there are likely to be impactful. The shape of the profile this morning, looking at the ES, the auction is B-shape. B-shape. That means it opened higher, moved lower, and found it moved lower and it found balance and it formed a B shape. We're holding below yesterday's range. We tested the mid of the session. We'll look at that in a minute. and held 328,000 contracts. We are just on the edge. We are just on the edge of what we would consider normal for the last 252 days, which is 330,000. We still have time, still have 25 minutes to get that done, because the overnight stats shown on the pre-market summary sheet here involve the entire session all the way to the last second before the open. So 330 is going to be exceeded. So we know volume is unusual today. We also know that the inventory is 88% short, so we are leading quite short with 40.5 points of range. Here's how things look. So if you recall, yesterday, this was my bias. My bias is any push up. As I talked about yesterday, any push up, I'm looking for uh, a, I'm pushing the short side. The short side has to contend with 39.50, but the key target was from yesterday. If you don't recall, I put it on here nice and bright for you. Where was it? 39.50. But somewhere in here I put the 39.20 as the big area that you need to. I'm just scrolling through the YouTube video from yesterday. There it is. 39.20 as still the key target. I'm still seeing the move down from 41.70 as the impulsive move, the governing move, so to speak. And that move has not been canceled yet. And I'm, anything since then has been a pullback, and I'm expecting it to continue lower to 39.20. The low, just for argument's sake, the low today is 39.25. So we are getting there, folks. So that's where we stand yesterday. This was the plan. The plan is any push higher, look for an area to lean short, and then look for 39.50 to present some difficulty, and then take what you can get, because we're in balance, right? So that was yesterday's. That was the main expectation yesterday, and that's basically what we got. We pushed back into the prior range just by a little bit, found sellers, and then we tested all the way down, and we finished right in the middle. Pretty balanced yesterday. We ended up with actually a double distribution profile, with 39.62 being the split between the two sections. Here's what that looks like on the volume profile. So if we look at the volume profile yesterday, we see that we opened, we pushed into 39.76, right above the 72 low, 75 IB from the prior day. Then we chopped around, tried to push again, and really, honestly, I did not find a trade yesterday at all. Like, there was just nothing, despite the action, despite the double distribution profile, which are my favorite, because with double distribution profiles, you have a defined line in the sand right there, and a defined line in the sand, and you have a very clear high volume node or point of control, and a very clear high volume node and a point of control. And what it did yesterday is it ripped from high volume node to high volume node, pull back, push to high volume node, back, push back to high volume node, push to the higher high volume node, to the lower high volume node, and finish in the middle. Just an absolute, just block the kids' ears, but just an absolute shit show in terms of trading. Why? Because the market's seeing a lot of pressure from yields. There's just, the market expectation is that the Fed is likely to stop pushing rates, but the data is saying, hey, things are pretty hot still, and the Fed is going to have to continue doing what it's been doing, despite the market thinking that the Fed is overshooting or is wrong. It seems like the Fed is right. It's proving the market wrong. So that's what we've got. We reopened yesterday, a minor attempt higher in the overnight, back into the 39.65, and then boom, explosion downwards. and we've been holding steady. And this is where we get the B-shaped profile from. So the market rejected higher prices, is accepting these lower prices, and my expectation is the bottom is not done. Okay, so this is what things look like. You could see the delta is just not all that excited today. There's just not too much going on. It's interesting on the close yesterday, however, coming off of the bottom, this higher low, on the close, small lots bought the heck out of this. These could be zero DTE options, Wednesday options, or something covering, because that's just quite a bit of buying. I mean, they came back. The entire day, small lots really carried a lot of weight versus large lots, and the very large lots. The small lots really carried the trade. They didn't really get much done in terms of price, but look at how aggressive the buying is. There's a divergence here between price and the delta. This morning, if we shift that out and we look at what's happened since the session opened, this is 5 o'clock my time right here. Since the session opened, you find that delta is moving with price. You know, price tested up to 65, price dropped, delta dropped, price pulled back, very relatively stronger delta. Delta went back to even, and then price has been kind of holding at the low end, and delta has tried to make a recovery and is sitting sideways. Very poor participation by the large and very large lots, mostly small lots playing games here, and I'm expecting that to just continue. Look at the composites here. If you recall, this is the chart we went off of yesterday. We were trading in here somewhere, and as discussed, any push above here. So this composite held the prior value high, composite value high. Yesterday held the prior composite value low, and it finished, at the bottom end of the range. Really, the fact that it's below here doesn't surprise. The fact that it's down here is not a surprise, and we have pretty much a very similar situation. In fact, watch yesterday's Trader Bite, it'll be the same thing. Yesterday we opened below, test into the prior range, aim for short side. Today, pretty much the same thing. So if I unlock the scale and look up, we have the same, very similar thing. The way yesterday opened versus the prior range low, and the way today's opening versus the prior range low. I'm still going to look at the gap to settle area, this 39.50 to 56 area, as strong potential resistance. Still looking for it to roll over and get to the 20. Got pretty close. We're already close. We're about 15 points away, down into the 20. I mean, the trend is your friend, and the trend is clearly down. We're one time framing down, meaning lower highs, lower highs, lower highs. And so any push into the prior range, I'm going to look for spots to get short. Knowing that I have to look for spots to get short, not that I'm going to go out and seek them, knowing that the short side's where I'm leaning, it just frees me up from having to make the argument for the long side, because I've already done the work. I've already looked at the bigger picture, and I'm leaning short. The market has to prove me wrong, and the way it proves me wrong is it gets to the other side of value and breaches the other side of value for yesterday, and then has a weak push back, and then has a weak push back, has to pull back, and has a weak push lower, and then it continues higher. So it needs to take the value area. We need to move from the lower distribution yesterday to the higher distribution for me to change my mind about this. And in that case, it would break the one-time framing down, and it would start to shift up, and it's likely to start squeezing shorts. But from here, really, it looks like 39.20 down to 39.05. And then we get to the 3900 century figure, and that's what we've got. That's all she wrote. Look at the intraday. By the way, For those of you trading crude, I pointed this out in the Convergent Trading chat room just about an hour ago. Crude was right up against this key support right here, and it's held up. So it pulled back to key support. Look at how beautiful that is. It's just very nice structural setup here. And crude pushes back, pokes through, and then very likely to continue higher. Crude's expected at 79 and 80 relatively soon. But back to the ES. I mean, what's the trend, folks? What's the trend here? Very easy to see that we have these impulses, then we walk back up. We have an impulse, and we walk back up. We have an impulse, walk back up. This morning, impulse trying to walk back up and is unable to. So I expect it to continue to do that stair step down. So that's where we are. Not much more I can say about that. NQ, same story this morning. The LIS and NQ is right here. It's really obvious, almost too obvious. Prior week's low, 11,923, is yesterday's low. The NQ pushed right to the weekly low yesterday, and then we held it on a retest from about below. So the LIS and NQ is right here in the 11,920 zone, and has established a pretty weak low. So the NQ, unless it starts to squeeze through that 1190, unless it pushes through the 11920, I'm going to be leaning short as well. Okay. And that's really it. I don't have much more to say here. The overall picture, as it is for the NQ as well, is you have a lot of balance here. We'll merge all of these together because they've traded through. So as we merge all of these together, what kind of shape do we get? And that's what you have in the NQ. Just a lot of let me make sure. Oh, I'm just gonna kill the overnight data and look at the day only. So we are down here. There's just a lot of overheads. What I'm trying to get to, a lot of overhead. An excellent trade, excellent trade idea for the NQ is a pushback into the prior range, short against settle, probably let it push through, settle, come back, and then hit the bid for a short through settle, looking for it to come back to the open. That would be the key idea for NQ. And then from there, the NQ is likely to get back right back to that 11,600 area. Okay, so I'll leave you with that. Good luck today, and I will catch you tomorrow. Don't forget to hit the like button. Don't forget to click on subscribe. And by the way, I ran a poll. If you look up on YouTube's live chat, I ran a poll asking, does current market action suit your style, or is it hard to trade? About 75% of you initially said that it was hard to trade, and it seems to have balanced out a little bit. It's about 1 out of 3 basically is saying there are good setups, and about 2/3 of you are saying the trade has been tough, which is the camp that I'm in. I see the trade currently as relatively tough. Good luck today, and I'll catch you tomorrow. Take care.